Hey, Bulls and Bears. It is Sunday, October 24th, 2021. Back for another dose of economic reality. My name is Jason. You're watching Bull, Boom, Bear Bust. Dire warning from Twitter CEO Jack Dorsey that hyperinflation is here and it's beginning and it's going to be really bad here in the US. We're going to talk about what he said and analyze this a little bit here. Let's go right to his tweet here to get started. Dorsey tweeted this out on the 22nd, a couple days ago. Hyperinflation is going to change everything. It's happening. And yes, if you've seen what happens in countries where hyperinflation is allowed to run, and I say allowed to run because, yes, it is something that they could stop at any moment. We're talking about the money machine. But yes, if they allow this to run, it will change everything. It's already changing a lot of people's lives when you look at the rising cost of living. Of course, they're not going to blame the monetary structure. They're going to blame the shutdowns, the lockdowns, the infection, etc. Anything but the monetary structure, right? I think most of you know how that works by now. The money controllers, the money machine, the ones behind it, they don't want to blame their own structure for what's happening, right? So could it be that all these other events that are unfolding are convenient excuses for what's happening with the economy and the rising prices? Right? We're seeing farmers being paid not to grow food. We're seeing a record drought. Less farmers, less food production, higher food prices, right? Less product, more demand. Record money printing. We'll talk about that here in just a few minutes. Record run up in debt for household, for governments, for the Fed's balance sheet. The bank's endless amounts of money to loan out to people with interest attached, therefore creating endless demand and endless rising prices, etc., etc. All the things we've talked about on this channel, of course. But first, for maybe the new people to inflation, let's go to a little really short video that I found over at Investopedia about inflation.
Inflation is the increase in prices of goods or services over time. Dan just got paid and needs to buy groceries. Dan heads to the grocery store and loads up his cart with the items that he needs. These items cost Dan a total of $100. A year later, Dan returns to the grocery store with $100 to purchase the same items. However, now the same items cost $105 and Dan is forced to remove an item from his cart.
All right, I have to pause right there and make a correction. Instead of Dan removing the item from his cart, what's Dan nowadays going to do? And most people, they're just going to take on more debt and put it on their credit card. So most people are not removing items from their cart. And in fact, they're taking on more debt and buying more because they're afraid prices may rise or you might see shortages. And that's part of the supply panic. We start seeing people hoarding certain items. Here we've seen it recently in toilet paper and other items. But let's continue with this Investopedia definition of inflation.
Dan has experienced the effects of a 5% inflation rate. Dan must pay $5 extra to purchase the same items that cost $100 only a year ago. Inflation leads to higher prices and lower purchasing power. It's usually a monetary phenomenon caused by a country printing more money than is justified by the country's wealth. When more dollars are issued for a limited amount of assets, the value of each dollar is decreased. Many countries' central banks set an inflation rate target of 2 to 3% per year.
Okay, so there you go. We know the Fed has an inflation target, which in itself is flawed, right? To say that prices always have to continually rise is a flawed way of looking at things. If people don't have money, then prices shouldn't continue to rise. But when money keeps getting put out there in the economy via lending, via the banks that don't have to have any money in reserves now to continue to loan out money, via institutions that can get access to the Fed window for ultra low rates and buy up homes, for example. So this is a very flawed structure. No matter how broke the people are, no matter how much debt the people are buried under, they're saying that prices have to continue to rise no matter what. So in essence, they're putting the cart before the horse. They're putting the carriage before the horse. They're saying that rising prices is an indicator of a strong economy. Now, if prices were rising because of more purchasing power from the people, then yes, that would be true. But when it's just based on more debt and endless money printing, then it's a very flawed way of looking at things. All right, now Jack Dorsey came up with a came out with a follow-up tweet. It will happen in the U.S. soon, and so the world. So he knows, and most people in high levels, high positions, most CEOs and company higher level people, they know what's happening. They know this is worldwide. It's the same monetary structure wherever you go. The U.S. happens to be still the world reserve currency. Now that has been fading. Currently, about all transactions, or about 60% of all transactions in the world, are done or handled in U.S. dollars, but that's been dropping as the years continue. Now, there was a couple interesting follow-up comments to this tweet from Jack Dorsey. Let's take a look. Eric Larson tweeted out the following, quote, hyperinflation is defined as 100% cumulative inflation over a 3-year period. The U.S. will not get to that in any period in the foreseeable future. Maybe more countries, but not the U.S. Literally impossible. Right, now one more follow-up on that from Marius C underscore HODL. Literally impossible, question mark. Powell's on it, mate, to prove you wrong. And he gives the money printer goes burr meme right here with Powell at the money machine. Right, and that's something else too. When I say money machine, we're talking about the Fed, we're talking about the central bank, the money printer. We give it a few different names here. Now let's see what Bank of America had to say about this. Bank of America says the Fed is playing with fire by downplaying inflation and needs a new playbook. So yes, the banks know what's going on. Of course, the banks, they're making billions of dollars in this monetary structure. So they may criticize here and there, but you know, in the back room, they're doing some high fives and some big fist pounds to each other. Recent headline out of Reuters: Yellen says U.S. is not losing control of inflation. So Treasury Secretary Yellen, does she know what she's talking about? Is she right? Well, she should be right. She's the Treasury Secretary, but I think she's wrong. And I think we're continuing to see rising prices. Treasury Secretary said on Sunday that the United States is not losing control of inflation, and that she expected inflation levels to return to normal by the second half of next year. Now think about that. Inflation levels return to normal. That doesn't mean that prices are going to drop. It means prices are going to continue to rise, just not as fast as they've been rising. But when prices have already ran up, let's take the housing market, for example, 2 times, 3 times, 100%, 200% in some areas. There needs to be a price drop, not just a slowdown in the rate of increase, but a price drop to bring prices into alignment. So according to Yellen, prices are going to continue to rise, just not as fast. And she thinks that's no problem, that everything right now is affordable, even though people are taking on record levels of debt just to try to keep their heads above water. All right, so what do you think about Jack Dorsey's tweet? Is hyperinflation coming to the U.S.? Is he right? Please give me your thoughts down in the comments. I'd love to hear it. Thanks everybody for being here. Stay well, stay safe, keep stacking. Bye for now. Peace.